Hi there, I'm Tyler Bollhorn. Welcome to the Stockscores market analysis for February 7th, 2010. For this week's market analysis, I will be using the new Trading Desk website, which can be found at tradingdesk.stockscores.com. You can see the URL at the top of the page here. Now, the first thing we need to do is click on the login link in the top right-hand part of the screen. This is where I will enter my username and password. If you have never visited the Trading Desk website, then you will need to set up an account. But once you have done that, you're simply going to log in with your email address and password, and that will take you into the Trading Desk website. Now, the next thing I want you to do is click on the Chart Watch icon. Within the Chart Watch section, I have created for you a number of sectors. You can see them here in the right column of the page. Under sectors, we have all of these exchange traded fund sectors. And what I want to focus on this time is right down at the bottom, the sector under the video grouping called Weekly Market Analysis. Now, by clicking on that, I'm going to activate a list of the charts that we're going to look at tonight. In this particular case, we see here a table, and you can see that most of the major indexes and commodities that I follow in the weekly market analysis were all down today. But what we actually want to do is look at the charts. So click on Gallery, and that will bring up thumbnail-sized charts for each of the indices that we follow in the weekly market analysis. Now, my next step is to make these one-year charts. So I'm going to click on 1 year, and that will change the time frame of the charts. Now you can see that we have much longer look-back periods for each of these charts. Now, if you want to see them in larger view, simply click on the chart itself and it will expand, and now we can do our analysis. Now, I'm using a drawing tool within the video software that I'm using, so don't think that you're able to draw on the charts like this, although you could certainly print out these charts and do that. But what we can see here is that the Dow, which is represented by the ETF DIA, has broken down from a rising wedge pattern a couple of weeks ago, and we have switched from being in an upward trend to now the beginnings of a downward trend. Now, my expectation is that because the market has sold off pretty sharply in the last couple of weeks, we may get a little bounce back in the short term, but looking out beyond a week or two, I expect this market to go lower. Now, let's click on the currency chart for the Canadian dollar. You can see here the Canadian dollar hit some resistance at about just under 98 cents. And it also has support down here. So far it's holding above that support, but I'm a little bit concerned because the cycle of rising bottoms, which had been in place for some time, was broken last week. And so the optimism that was building has also been broken. So I would switch this chart now to a little bit more of a neutral chart, and if we get a breakdown below that support line, I would switch to a negative view on the Canadian dollar. All right, moving right along, let's take a look at the chart of gold. You can see that gold has gone from being in an upward trend where we had rising bottoms, and you can see that the bottoms are rising, to now a situation where we have falling tops. And that means the sellers have taken control of gold. Good chance it bounces back a little bit in the short term, but I think longer term gold is headed lower. Next chart, oil. Oil has also pulled back over the last few weeks, but it has pretty good support right where it's at, and it's really trying to hold that support. I am concerned about this falling top, which of course is lower than the previous top, and therefore some pessimism is creeping into the oil market. I would be cautious with oil, given the fact that it was unable to move back to new highs last week. All right, moving along, let's look at a chart of the NASDAQ 100. Very similar to the S&P 500 in that the upward trend line was broken. We now have a short-term downward trend. Yes, we may get a little bounce back in the short term, but I think that this market is more likely to go lower. Notice also that the sentiment stock score is on a downward trend and has fallen below that critical 60 mark that we look for as a sign of optimism. S&P 500, very similar to the other charts that we've looked at for the U.S. markets. We had rising bottoms on the NASDAQ, we had rising bottoms on the Dow. Those have been broken. The sellers are taking control. Be cautious with US equity. And a couple more charts to go here. This is a chart of the TSX 60, the Canadian benchmark index. Strong resistance here. We've pulled back for some time, perhaps a month. We're still above support, however. This chart remains in a neutral consolidation pattern, probably due for a bounce back. We should see a bounce up higher, but if we get a breakdown below this line of support, I would turn from being neutral to pessimistic. So we want to be a little bit cautious here because we are at support. This market needs to hold that line of support. Finally, the US dollar is probably the best looking chart that we have of the lot tonight. You can see that the downward trend line was broken. We have formed a rising bottom and more recently broken through resistance from that rising bottom. I think the US dollar is likely to continue higher as people apparently flock to the safety of the US dollar worldwide. So that's been a quick review of the important charts that I look at on a weekly basis using the Stockscores Trading Desk tool. And again, you can use that Trading Desk tool by going to tradingdesk.stockscores.com. All of these tools are free to use. You just have to register on your first visit. I hope that you've enjoyed this week's Stockscores market analysis. For more information on the tools and services offered by Stockscores, give us a visit at www.stockscores.com. Have a great week in the market and trade well.